What's up, you guys? Welcome back to the channel. If you're new here, my name is Evan and I make videos about hot stocks, dividends, and options. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. In today's video, we're going to go over a handful of reasons on why NIO is still a buy right now in my opinion, and why they're going to be a buy for a while into the future. Now this is all my opinion and I'm not a financial advisor, so consider this all to be entertainment. But I'm going to give you my 4 or 5 reasons on why I think NIO is underpriced in comparison to where they could be in the future, even in the next 1 to 2 years. I think NIO is going to be well beyond what they're trading for right now. But looking at NIO's share price today, they're down 4.5% on the day. And if you guys saw my video yesterday, or if you just looked at NIO in the market yesterday, you know they spiked up huge yesterday. Like if we look at the 1 week chart, they're up 14%, almost at 15% on the week. And they went from $27 and they spiked up to $29 at open yesterday, or around open. And then by the end of the day, they hit over $32. But then in after hours, NIO pulled back moderately. But you can see today they slightly tapered back down and they're not at that $32 mark, but they're still above $30. And I think at $30, this is a good spot for NIO to be at. Because just in the minds of investors, a nice even number, like $20, $30, or $40, just subconsciously, it's kind of a barrier. And once NIO surpasses that, it seems as though it would go up easier. Now, I don't know if I'm the only one that thinks this, that once a stock hits an even price, that it kind of stays there much longer than at just like, say, $27 or something. And I think the next big milestone is going to be that $40 mark, because that's where JP Morgan put out their price prediction for NIO. Also, there's another price forecast for $33, so that could be a pretty big spot too. And I mentioned that in yesterday's video, that somebody from Morgan Stanley put out a price prediction of $33. So if you haven't seen that video, make sure you go and watch that. That kind of explains why NIO spiked up so much yesterday, the few reasons behind it. But I want to go back to the 1-day chart here on NIO and compare them to SPY, which watches the overall market. So here's NIO's chart for today, and then here's SPY, and you can tell they look pretty similar. And this is a little different than normal, because normally NIO isn't exactly following the market. They have similar trends, but I can give you an example here. If you look at SPY on the 1 week, you can see SPY's been down most of the week. They had a couple consolidation periods, but then they continued downwards. And I think this is mostly due to the election and to rising cases in the pandemic. But then if you look at NIO in comparison to SPY, NIO is up almost 15%, and they've been pretty much upwards all week. So NIO isn't always doing what the market is doing. They kind of have a mind of their own, and it's not a bad thing to see. I think it's good for NIO to kind of do their own thing. But now getting into why NIO is actually still a buy in my opinion, and why I think they're going to be a good stock to hold long term. The first reason being that electric vehicle sales are supposed to skyrocket in the next 5 to 10 years. Automakers are somewhat trying to phase out internal combustion engines, which is just your normal vehicle that you see on the road. And they're trying to replace them with emission-free vehicles. And this is also due in part to governments. A lot of governments want to get in and reduce emissions and pollution, and so they're probably going to start enforcing laws and regulations, which in turn will make people buy more electric vehicles, therefore causing electric vehicle companies to grow and produce more vehicles for the demand that's at hand. So by 2025, electric vehicles and hybrid electric vehicles are supposed to climb exponentially. And it's expected that 30% of vehicle sales are going to be these EV and HEV vehicles. And if you compare this to 2016, just under 1 million vehicles, or 1% of the global auto sales, were from plug-in electric vehicles. So to go from 1% up to 30% in 9 years is pretty incredible. And I think this is just going to increase with time. And by 2025, JP Morgan estimates this will rise close to 8.4 million vehicles. And that would represent 7.7% of the market share. Now this doesn't really compare to hybrid electric vehicles. They're forecasted to jump from 3% globally up to 23% in the same time period. But you can see, even if it's a hybrid electric or a normal electric vehicle, we're going to see a vast increase in the number of vehicles on the road, likely within the next 5 to 10 years. And if you look at the bottom of this paragraph, it says that this leaves internal combustion engine vehicles with around 70% of the market share by 2025, and this is expected to fall to around 40% by 2030. So in the next 10 years, around 60% of vehicles are going to be EV and hybrid EV vehicles. And that's not only going to be huge for NIO, but it's going to be huge for the overall EV market. But now getting into a few reasons specific to NIO on why they're still a buy. NIO has their battery as a service, and I'm sure you guys have heard about this. It's basically where you're able to buy a NIO vehicle, so you're able to buy an electric vehicle for about 20% cheaper than what it normally costs. Now with this reduction in price, you don't own the battery, you end up leasing or renting the battery every month, and it says that you can subscribe to a 70 kilowatt hour battery for $142 per month. And this $142 per month is supposed to be somewhat equivalent to the cost of gas in China. So you're kind of getting a cheaper vehicle, or at least a cheaper electric vehicle, and you're paying a similar price per month if you were buying gas for a normal internal combustion engine vehicle. Now with this battery as a service, there's also the swappable batteries that NIO offers. And this is essentially where you drive your vehicle into this battery swap station. It takes your battery out and replaces it with a new fully charged battery in 3 to 5 minutes. So it takes approximately the same amount of time as you would take at the gas station to fill up with gas, and you drive away with a full charge or like a full tank of gas. And I didn't know this, but apparently you'll be able to change out for different battery pack sizes. So if you needed a larger battery for a bigger road trip, you could possibly pay more and exchange out for a bigger battery. Now I don't know if it would cost more for a bigger battery, I'm just kind of guessing, but that would be very useful on longer road trips and things like that. And then on top of both the battery swap technology and the battery as a service, NIO is also expecting to deliver 150,000 units per year by the end of 2021. That's equivalent to 12,500 vehicles per month. And the CEO, William Lee, said that they should be able to do this without significant investment, basically by leveraging their partnership with JAC Motors. And if you didn't know, NIO currently outsources their vehicle production to JAC, but that's not a bad thing because a lot of companies do that. But it's definitely a smart move for NIO to leverage this partnership in order to increase their deliveries. And now the last couple things sort of driving NIO's share price forward, and why I think they're still a good buy, especially long term, is that they have a lot of government support. The Chinese government supports NIO, and they actually have a contract with NIO where NIO is delivering vehicles to Beijing municipal administrative institutions between 2020 and 2022. And this isn't the only government support NIO has. It seems as though the Chinese government doesn't want NIO to fail, mostly because they are an electric vehicle company. And I'm sure with pollution so high in China, cutting down on emissions and pollutions is definitely a good way to go. And the last thing is that NIO actually rolled 5,000 vehicles off the production line in October. Now they reported this yesterday, and this is their first month they actually hit 5,000 vehicles in 1 month. And when they announced this yesterday, there's still 2 days left to produce more vehicles. So I'm basically getting at the fact that NIO is increasing their productions and deliveries each month. And then in early 2021, we should see 12,500 vehicles per month. So if you guys are interested in investing in NIO, I'm not really sure what you're waiting for. This could turn into the next Tesla or the next Apple, where people thought about buying in and then they never did and they regretted it because the price went up tenfold. So I think if you're planning on investing in NIO, I would do it sooner than later. And if you're worried about having a high average cost, just dollar cost average your way in, and then you'll get the average of NIO's share price over an extended period of time. So for those of you who made it this far into the video, are you guys still loading up on NIO shares, or are you waiting for them to pull back a little bit? I kind of want to hear what you guys think of NIO's share price right now, and if you think they're overpriced the way they are right now, or if you're still adding shares to your portfolio. And the last thing, if you guys haven't signed up for Webull, sign up using the link in the description, fund your account $100, and you'll receive 3 free stocks. And this promotion lasts until the end of the month. So you only have until tomorrow, so make sure you get your 3 free stocks. Also, if you guys enjoyed the video and you enjoy these NIO updates, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.